Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the first trading day of September. Now, a lot of folks have already reached out and asked me. They said, Shane, I saw the title of your stream. It's the second trading day of September. And I go, no, it's not. This is the first real trading day of September. Yesterday, we had the cowboy hat on. We were having the Labor Day weekend celebration and all that. And all that's fine and dandy, but it's over. And it's time to trade. It's time to work. We've seen a big-time break in gold. That's one of those things we've really been talking about a lot, about the gold market here over the last, I would say, 3 months. We were waiting for a big break. That bullish pennant looks to be broken on the monthly chart, on the monthly time frame. So we're definitely looking for some big things out of gold to the top side. Silver's exploded up over $40. Actually had an opportunity maybe to buy a pullback there earlier today down to a 4-hour 62% level. We're going to recap that. Great Britain pound USD on the move. Right now we've got sort of a big sell-off on the daily chart. We've got another trend line potentially to look at that I think may give us a decent entry to the short. I'm going to go ahead and cover that as well. We've also got the Euro USD. We talked a little bit about maybe the chance of a bearish breakout there in our picks of the week in our spotlight markets in that Euro USD, and we're seeing a little bit of a sell-off there on the heels of that EU CPI report that came out during the U.S. overnight. So we got a lot to talk about. We got a lot to go over, and we have a surprise announcement coming from the United States President, President Trump. A lot of rumors flying around about this one, and admittedly, I was sort of out of the news loop over the weekend. Sometimes you just have to take a step back and get away from the markets for a few days, but I didn't watch the news. I didn't do any of it, and all I've been hearing is rumors about Trump's health. Is he going to resign today? And that came as a real shock to me. I don't believe that that's going to happen. I'm going to show you the probabilities of that as well. To answer your question, though, Bobby Bob, if let's see what. Hi, Shane. Will Trump's speech, will it strengthen the dollar in the U.S. in any way? I don't believe so. I don't believe it's going to impact the currencies, but you got to think that that's maybe a little bit of what's driving the gold market to the top side. I mean, you may have to just figure that in and say, maybe potentially that's a bullish market driver for gold just because it's uncertainty. I don't know. I don't know what he's going to say. Supposedly it's an announcement on the Department of Defense, but there are some big things happening. I'm probably going to cover most of that later in the week, but there are, U.S. does have warships outside of Venezuela. There are a lot of folks talking about National Guard troops and military troops being deployed to U.S. cities, and all that spells domestic uncertainty, and that potentially could be a bullish market driver. So we've got a lot to cover there. Andrew, good to see you. Andrea Gorwal, I'm confident that you got in on that gold move. A very, very good call on that one. And as soon as we broke 3,500, boy, it was relatively easy trading on the short-term scalping. Let's see, Team Marina. Good to see you, Team Marina. Happy Monday, or it's Tuesday. I know. It really is Monday, though. We're just getting started here. Let's go. Hello, Zoli. Good to see you, Zoli. Joshua Chung. Hello, Shane from French Guiana, South America. All right. Good to see you, Joshua. Welcome. Alec McLeod, U.S. dollar, Swiss franc. Yeah, we'll go ahead and get that going here in a second. I want to start out with the Great Britain pound USD. That's a pretty good one. And Gordon Williams. Good to see you, Gordon. Welcome. All right, guys. We got a mover and a shaker here on the Great Britain pound daily chart. I like the daily time frame. Lately, when we've been talking about Forex pairs, the dailies have been tough to beat. So what we're going to do is we're going to keep this very simple. We're going to draw a trend line. This trend line was one real similar to what we used to trade that Euro USD. It's not a bad one. Start right down there at that spike low. There's your first, that's your initial low. There's your first touch, and then it's all about the third touch, a little bit of compression here, and it looks like we've had support, nice bounce, sort of an inverted hammer, or excuse me, just a regular hammer. Then we broke, and now we've broken beneath that trend line. So there's going to be some traders that are taking shorts. They're going to be looking to short this Great Britain pound USD, and they're probably correct. The real thing we just got to figure out is what do we want our entry point to be. Now, most of the time on a trend line type of a reversal play, you're just looking for a daily close or a 4-hour close or whatever beneath the trend line itself. And right here, you can see there's your break. So you're probably looking at selling the daily close today. But if you wanted to be a little bit more sophisticated with your entry and a little bit more astute, you could probably wait for price to sort of climb back up to that trend line and maybe take a short from there. So I'm interested in maybe being patient. I really want to be patient this week. I know that it's time to trade and we've got to be aggressive. But NFP's Friday, and that's a big deal. That is our number one market driver, in my opinion, right now. So that trend line's sitting somewhere right around 135-ish, 135.06, 135 even. That's probably a pretty darn good entry point to the bearish side of the market. I don't know, though. We just got to wait and see if we get that big reversal maybe, or a pullback off of today's reversal in a better short. Either way, if you do look at going short this market to capitalize on the trend line, I think your stop out point's got to be, well, I mean, this is tough on MT5 because it just throws these things down anywhere, but your stop out point probably needs to be right above that swing high, somewhere right up above 135.50, and then you're looking to grab maybe a 1-to-1, 1-to-2. The beauty of trendline reversals is when you do trade them, you can get paid off in a big, big way. So that's very basic. Very basic stuff, guys. Basic trend lines. Trend lines are powerful. They can be very, very good to you. They can also sort of lead you astray if you're not using the right time frame, or maybe you're down in the 1 minute range or the 5 minute range. So we definitely want to be involved with time frames that are conducive to us grabbing a move. And what that is for me on a Forex, it's a daily chart, it's a 4-hour chart, and maybe even a 30-minute chart if in fact the market is alive, and it's alive and kicking today. So there we go. Let me see. Brian Lowe, gold's going crazy. Yeah, we got to get to gold. We'll look at the Swiss here in a second. Yes, sir. Good to see you. Yes, sir. Dave F19. All right. Got a full house today, and that's good to see. Good to know that you guys are in the loop and you know exactly when you should be trading and maybe when you shouldn't be trading. Yesterday was extremely difficult to trade. We talked a lot about just being patient throughout that holiday and what I would call sporadic market depth. There's good market depth here now. This was the silver trade that we outlined yesterday. I talked about this in our Switch Markets weekly newsletter as well. This was our spotlight. One of our spotlight markets was silver, Euro USD, Euro Australian dollar. But this right here, nice pullback on that 4-hour chart. And then we got some compression right around the 50% point, right around our 13-period moving average, held up very nicely as downside support. And then on the 50, right there at your 50%, off of this move right there, spike low, spike high. What we were targeting really is somewhere maybe right down around that 40. This actually is just a little bit off. We should have been doing this right up in there. Fibonacci golden zone. Remember, the golden zone is the area between the 50% and the 62%. I'm a big fan of trading 62%. So I try to do that pretty much whenever I get a chance. And you can see right here, we came down, we failed right in that golden zone, and then we rebounded. So what, our 4-hour low was right down there, right around 40.14, somewhere in that zone. And we were down there at 40.04. So if we were aggressive, you probably could have got that move. If you weren't aggressive, that's okay. There's going to be more trades. Just have to be patient. Be patient with silver. I think that the closer that your entry point to the bull is around 40, the better off, the better off you're going to be. That's absolutely key, guys. So just wait. Be patient with these markets. You don't have to just dive in, although, there's no question about it that we are looking at a bullish type of a market here. We broke above 40, and to try to find, or at least try to predict accurately, a top in the silver market is going to be very difficult because there's really no resistance up there. I mean, we're not making all-time highs like gold is, but there's not much up there above 40. So let's just be patient. 30-minute chart, if you wanted to take a late-day trade, I would definitely be aware of what Trump says at 2 p.m. Eastern. That's in about an hour, about 52 minutes from now. Be very careful if you're trading on or around that statement, because we just don't know what it's going to be. I'm going to talk about that right now. But that right there, not a bad 30-minute chart. Pull back 38%. We're still extremely bullish. I want a bigger entry, a bigger trade, a better risk is from 40. But, beggars can't be choosers, and sometimes we have to be aggressive when the market's moving. So right there, 38%, right around 40.62. That's a pretty good support zone for spot silver as well. Lewis Shepard, good to see you, Lou. Always a pleasure. Small Easy, hello, everyone. Hey, Small, how you doing? Lita, good to see you, Lita. Let's see, Blue Mango, Shane, since we're in new territory with gold, how do you calculate bullish targets? It's a fantastic question, Blue. Let me have a sip of coffee here. The biggest thing I always say about markets that are trending, let's just go right out to gold. You guys are all interested in the gold market, so let's do it. When you have a trend, a breakout trend, and you're making new all-time highs, it's very, very important to understand that there are no technical resistance levels up there. There aren't any. There is nothing up there that's really going to entice us just to take a naked short. So what we need to be thinking about right now is all the different ways that we can get on this boat to the top side of the market. So if I was looking at gold today, right here's a good look at your 920. You can see that daily bid back on the 25th of August was an absolute banger. You were buying 33.75s, and then you went right up there to 35.24s. We had a pretty good read on this. You also had a 4-hour crossover that gave you an opportunity to buy as well. And that's back when Jay Powell was at the Jackson Hole Symposium. There was the bid. There was the idea. There was the bid. There's a pullback, and then we just grind north. Well, that's fine. What do we do now? And I would say you're going to have to go to a short time frame to try to jump on this train. 3,500 is a huge level. Right now, we're trading 35.25, right around 35.25. So that shouldn't really surprise anybody. I mean, we know typically what happens when we get into a situation where we're trending into all-time highs. There is no resistance up there. However, there is going to be areas where you're going to see price action really consolidate. We talked about this gold market a lot, and you see what did you have right there? This is a 4-hour chart, so 4 hours, 8 hours, 12 hours, about 16 hours. The fight really was right around 3,500. And then we broke. We broke in the last 4 hours. A lot of that has to do with the Trump talk and some of the rumors surrounding that. But right this minute, where do you want to buy from? You got to really look at 3,500 as being support now. You broke above that level. We had a pretty good idea that we were going to do just that. So that zone was decent resistance, and it was the previous all-time high, and it held up several times on just really short time frames and all that stuff. Well, that's great, but now it's gone. Now we've beaten it. So the idea here is this. What once was topside resistance is now support. So we want to be looking to buy potentially from 3,500. In my view, that's probably the only way that I'm interested in playing it. I'm not interested in selling under really any circumstances right now just because it's not conducive to us being profitable. It really isn't. I mean, you can sell it, and you might get lucky and see price cursor maybe fall from current situations. But if the wrong thing is said at this Trump press conference about his health, I mean, all the rumors are about his health. If something is said about his health, or if he alludes to something being a health problem, potentially forcing him out before his term is up, the gold's going to absolutely explode because it's uncertainty. It would be a U.S. president leaving office early, and we weren't even faced with that under Biden, and many of us didn't believe Biden would finish his term. So what you could do is just take a good look at your levels, spike low, spike high, and there's your pullback, 35.08. It's pretty strong. I would be looking at 38% in the silver and the gold market just because you really are trending right now. You really are trending. So keep that in mind. Absolutely keep that in mind when you're trading gold. Now, as far as to answer your question, Blue, how do you develop topside targets? And I'd say, well, it's dicey. It's hard. I mean, I'm partial to big round numbers. That is pretty much the only thing that's going to stop this market, at least periodically. So what's the next one in my view? Probably going to get some action around 35.50. You're seeing some consolidation around 35.25 right now. So I would be looking at those quarter handles relatively closely, 35.25, 35.50, 35.75, 3600. Those are probably going to be short-term areas of resistance. But from a broader perspective, now that we've broken 35, where do we go? For me, the next one would be the quarter handle, and that essentially is going to be 35.750, somewhere right in there. 35.75, right in that zone. 3 quarters. I think in terms of quarters, a lot of markets do, a lot of traders do, and what you've got there is an even number like a 3,500, 35.25, 35.75, and all that's great. But you're also going to be in a situation where those bigger handles, those I guess you'd say the macro quarter handles, instead of 35.74, what about 37.50? And this is quite a ways away. I mean, nobody's really talking about these numbers here, but you have to really sort of figure that we're going to go up and we're going to have a look maybe at 34.75, something like that, 37.50, excuse me. It's hard reading the gold charts sometimes when you're used to Forex. 37.50-ish, probably going to be a pretty good area of resistance. We should see some compression there. And then the next one's going to be what? Probably maybe 3,800. Realistically, guys, if you go to 37.50, you're probably going to print 4,000. I think my topside target, if I was going to hold a position, say for the next, 6 months to a year, maybe 6 to 9 months, it would be probably for 4,000. And you guys see exactly how really explosive this market is to the top side. Once 35 was gone, we went to 35.25 fast. That's a $25 gain. That's a lot. I mean, that's a big move for an intraday session here when we're talking gold. So right now, your gold market's up about 1.5%. Gold futures are up even more than that. You can see December gold futures right here. You're up about 35.91. You're printing 35.91, which is up about 2%, 2.15. Why would gold futures be up higher than the spot market? Because that's a December gold futures contract. You're pricing what we believe gold's going to be worth in December. Typically, that's backwards. We look at assets that are priced in the future. It's not being worth as much as what we got today. So you'd be looking at near month contracts versus deferred months. December is going to be the contract that everybody trades till the end of the year. That's a big contract. Typically in August, we start trading December gold, and that is going to really a reflection. This pricing, the difference between the futures market and the spot market, really does give you an idea of what we believe gold is going to go to. So to me, I mean, there's no question about it that we're very, very bullish here. Of course, the 920 EMA, you may be able, I mean, this is the 920 EMA crossover. So when the 9 crosses over the 20, potentially you're just looking to buy. I mean, you could go down to a real short time frame and potentially maybe get a trade. But you can see right there was your buy signal back at about 9:45 a.m., 7:45 my time, and it just has been rallying. So we probably missed the boat on this one today. Right now we're in pullback mode waiting for gold to come back to us so we have a chance to trade it with a little bit of confidence. Definitely what we're looking at. Hey, Alan, how you doing? I'm confident everybody's trading very well. Right now, though, the Dow's showing some weakness. We knew we were going to get a move today. We knew we were going to get some moves. Business is back. The traders are back in their seats, back in their offices, and a lot's going on today. So we got to get to it, get to a few fundamentals at least. Let's go ahead and let's see. Now, what's next? All right, welcome to the Switch Markets community. If you guys are interested in making a few trades on some of the ideas that we're talking about here, or maybe just checking out a free demo account, or also maybe some of that functionality of that algobuilder.com, we're going to have a webinar dropping very soon on AlgoBuilder, and that could potentially be a game changer for a lot of you that want to incorporate AI into their trading. So there's a lot of value over there in Switch, plus we've got the daily live streams. We're going to be looking maybe to sign up some one-on-one meetings after the webinar with me. So if in fact you do see the webinar and are interested in having a one-on-one, we could certainly line that up probably for later this fall. There is going to be some travel on my schedule coming up, so we're going to have to probably be off for about a week, maybe a little bit longer there with our live streams, but we will be back by the end of September, going hard pretty much every day, maybe multiple times a day. We'll just wait and see how the schedule goes, but a lot going on at Switch. So if you want some of that value, if you want some of that value added from your brokerage, go ahead and check out Switch Markets. Tina, good to see you. Tina, welcome. Let's see, Tuesday through Thursday, psychology. It's all systems go, especially today. You want to trade. You want to be trading today, tomorrow, Thursday. You want to be trading even Friday. NFP is Friday. We're going to have that live for you. That's the big market mover this week. But it is all systems go, and we want everybody to make sure that you don't get left out in the cold. And what I mean is you don't want to be trading big accounts and taking big risks on, say, a Labor Day Monday when there just wasn't anything going on, to the point where it would have been irresponsible to put a trade idea out. And for me, I just said, nah, let's wait. Let's wait till things shake out a little bit for tomorrow. So I think that we're going to have a pretty darn good trade idea coming out, probably going into that Japanese session tonight. So you'll have it first thing for your London session if that's when you're trading. I'm looking forward to doing that this afternoon. Probably going to be facing the Aussie. Good movement in the Aussie, so I want to look at that right now. We'll look at it in a minute. But Tuesday through Thursday, you want to go hard. You want to trade your plan aggressively. You manage your risk smart. You're still prudent risk managers, but you're aggressive. You're looking to trade. It's not yesterday's mindset's not there anymore. We're going pedal to the metal, trying to make our money, make our P&L, hit our profits, pass our challenges, get qualified to run your account in your prop firm. That's what we want to do. We're looking for profits. Tuesday, Wednesday, Thursday, we are looking for profits. There's no two ways about it. It is time to trade. And I get excited, as you can see. I'm always excited about trading. But typically, when we go after Labor Day, that is when the rubber hits the road for me. So I'm really looking forward to this. Week 36, can you believe it, guys? We're almost done with 2000. Well, we're not almost done with 2025, but it is clicking right along. So everybody keep your head, trade smart, and we're going to have an opportunity to make some good cash. Well, I mean, I'm not supposed to say things like that, but really, the opportunity is now. It is now. You want to be in the game, trading aggressively from now until Thanksgiving holiday here in the United States. This is one of my favorite times of the year, football season, American football. Love it. After Labor Day, liquidity back in the market. We might be a little sluggish. We might be a little sluggish to begin with because it's been a long summer. A lot of these markets have been in complete rotation, meaning they've been flat. They haven't been breaking out and trending. Today, a much different story, So I'm interested in potentially getting in on a few good trades. I do want to take a look at the U.S. indices as well. I believe we had some 15-minute orbs that looked pretty good. I'm going to go ahead and look at that as well. Here's what we got on tap for this week. Labor Day was yesterday. That was the fun time, but that's over. Tuesday, EU CPI, ISM reports. We're going to look at EU CPI. The ISM reports mean very little to me. They don't really show me much of anything with regards to tendencies to be able to predict an economic cycle. They are what I call academic numbers. They're made by the folks in the ivory towers, not necessarily traders. I like listening to traders. I like listening to people that understand how markets function, as opposed to academic theory. I'm not real big on that. But there is some value there, so we're going to go ahead and look at ISM, but very, very briefly. Wednesday, JOLTS jobs numbers. Those are going to be, they're a secondary number as well, but they are going to give us sort of a preview. They're going to get everybody talking about what's coming Friday, which is our NFP number, and then Thursday, ADP, non-farm employment change. The other thing about Thursday is those EIA crude oil inventories. Those are going to be coming out Thursday. Typically, when you have a holiday on a Monday, EIA crude oil inventories get bumped to Thursday. So that's important. Remember, if you're trading crude oil, you've got to be aware of that on Thursday. That's going to be a key market driver. Now, Friday's NFP Live. I'll be up bright and early on Friday. We'll be up and at them probably about 4:30 a.m. my time. We'll be going on about 10 minutes before that release drops, and we'll be ready to rock and roll. So that's a big one. Please join for NFP Live. We always have a lot of fun doing that. I'm not really sure what strategy we're going to use to trade the action. We may use the 9 EMA, but I'm probably going to be scalping the 920 with some Fibonacci retracements. That feels to me like the thing to do. Also, remember, in our Switch Markets Live webinar series tomorrow, we're going to be doing the Fibonacci trading strategies. I'm going to show you some of my secret sauce and what I like to do with Fibbies. A lot of times I just draw the Fibonacci's here on the live streams, but I don't really get into sort of the tall grass about what exactly they are and what they can do. We're going to talk about that tomorrow on our Switch Markets Live series. All right, news of the day. Here it is. Core CPI from the Euro USD was really a market driver, a pretty darn good one. You can see that core CPI and CPI both came in sort of in line with expectations. Year over year, core ticked a little bit higher, so inflation in the Eurozone is moving up just a little bit. CPI month over month for August crept up a little bit higher, 0.2%, away from 0.0% last in the previous release. So this was definitely sort of a hawkish type of a scenario, but we didn't get that price action reflected in the Euro USD or in the Euro itself. We're going to talk about that in a minute. Not really good when you've been cutting interest rates aggressively in the EU to have the inflation ticking higher. Nobody should be surprised on that one. All right, ISM manufacturing PMI, not really the biggest deal in the world, 48.7 and 63.7. What do those numbers mean? They don't mean anything to me. I really don't. I couldn't sit around and say, oh, that's a 48.7 ISM. Just couldn't do it. So for me, I'm not interested. But what I will say is this. Anytime you judge one of these numbers relative, we always look at them relative to something else. We look at them relative to the previous release and our expectations. So right here, you're looking at 48 and 49. Those are previous release and expectations. We came in at 48.7. That number means very little to me. ISM manufacturing prices. This is a little bit better, a little bit more important because it is an inflationary metric, but it's not really one that we look at like CPI or PCE or any of that. And you can see right there, you've got about a 63.7, which is just a little bit beneath the previous release and a little bit beneath what we were expecting. So that would be a stronger number, a more positive number, but I wouldn't get too caught up with it. And then right here, here's your 3-month T-bill and your 6-month T-bill. Not really much going on here at all. You can see yields sort of fell just a little bit, and a lot of that has to do with expectations for interest rate cuts coming directly. So let me see. I got way behind on the live chat. Let's go ahead and have a look. Let me see. Yeah, Tina, sorry, I got way behind on this, guys. My apologies. Let me see. Droopy, hello from Texas. Loved the cowboy hat yesterday. Thanks, Droopy. I appreciate it. I don't break out the Sarantelli very often. It's always a special occasion. I wear it like once or twice a year. But those things are nice. I mean, if you like cowboy hats, those Sarantelli makes a pretty good one. Make a pretty good one, and they are not cheap, I'll tell you that. Let me see, Tina. Sounds interesting. PMI didn't impact the market much. No, Tina. It's not a market driver. Don't sweat the PMI. Let me see. Just got a new prop fund challenge. That's great news, Tina. Congratulations. There's been a few of you that have been passing some props lately, and that's always a good thing, guys. You pass your props, you get in there, you start trading the money, and then you start paying yourself for your time. That's what it's all about. Let me see. Droopy, what the heck is happening in Japan, and what does that mean for the U.S. dollar, Japanese yen this week? Well, we're starting to see turnover. We're starting to see big-time turnover because the global environment, the global economy is in a state of flux. Global politics are in a state of flux. The Russia-Ukraine situation still presses on. We thought we may have that resolved by now. That's definitely a bearish market driver in a lot of ways, but it really is. Folks are interested. We're going to talk Trump here in a minute, but there's a lot of turnover at the global level right now in global leadership. We saw it with the World Economic Forum, the WEF. All of a sudden, Larry Fink from BlackRock is now the sitting head of that, the acting head of that, as opposed to filling in for Klaus Schwab, who stepped down and is actually under investigation. But, guys, there's a lot of people under investigation right now. This is really a key point in the global political hierarchy. There's a lot of turnover. We've never seen anybody really prosecute central bankers ever. You're seeing it now. You're seeing it now. We talked FOMC all week last week. That's exactly what's happening. So, Droopy, I think it's just global turnover right now. Let me see. Tina, could you have a look at the S&P 500 shorting it? Looking good already. Hit a 2 risk versus reward. That's fantastic. Let me see. Tina, I love that big cowboy hat too. All right. Well, thank you. Brian Lowell, I'm a trader in Ghana. Should I stick to trading in London, U.S. sessions, or take trades when they get into the right zones? Well, you got 2 decisions to make there, Brian. If you want to trade when liquidity is at its highest, I would say for Forex pairs and definitely for U.S. equities indices, you probably need to be looking at the U.S. session or that London-U.S. overlap after the U.S. opens towards the end of the London trading day. That's probably the area when most traders like to focus. However, your time zone may not just be an option for you. We have traders in New Zealand and in Australia, and it's just a non-starter. Those time frames are like, you're basically working a graveyard shift or a night job. So what we have to do is be smart. If, like, let's say you were in Tokyo. If you're based out of Tokyo, you probably are going to be trading the Tokyo session. If you're based in Sydney or Melbourne, you're probably going to be trading that Sydney Open. So you've got to design your trading approach to what works for you. For me, one of my first jobs in the market was I was tasked with trading Euro FX futures, and I found that during the U.S. trading session was absolutely brutal. A lot of the days were really, really slow, and I was actually waking up and getting to the office after the action happened. And so what I ended up doing for a little while was waking up at about 1 a.m. my time and trading during the overnight. Now, I don't advise that. I mean, unless you want to do that, and if you're a night owl, that may work for you. But you have to really know what assets are moving when. So to answer your question, it's really going to depend on where you're at and what exactly you want to trade. I think that's absolutely huge. So if you're in Ghana, if the London time zone works for you, you probably should just stick to it. And if you're making money in the London time zone, you got to stick to it, right? You can't just go in and say, I don't want to trade. But no, you're making money. All right, let's look at this Euro USD here. Euro USD, we had really an interesting thing. This is what we put out, the short video on Switch, which is our picks of the week. We were pretty good on this one. This wasn't a bad one. I was talking about a bearish break, and it's not like we have a crystal ball here, but that's exactly what happened. Why did we get a bearish break in the Euro USD today? I really couldn't tell you. We're seeing a bit of a rally in the dollar. We're up about 0.6% on that DXY, and that's why this thing went down. It's because the dollar gained on the euro. But the euro, you just had the CPI numbers came in hot. That should have been a bullish market driver for this pair. It should have strengthened the euro, and instead we're just seeing the USD pour it on a little bit. I would say that this is just random price action. So as much as I would love to take credit for this big move today to the bear, all we were is in a nice position. In a real nice position with our trend line. We know exactly where we're going to get out, right above that liquidity sweep. And right now, we're just waiting for a retracement. We're waiting for this market to go down maybe to a 115 area, 115 flat. I think there's an opportunity for that. But remember, you've got a decision to make. With this trend line, theoretically, your stop loss would be somewhere up here where you'd be waiting for a daily close above the trend line before you would exit. I just don't see that as being feasible. I think that's way too big of a risk. That's almost 200 pips. I think you've got to go and focus right there on the top of that Jackson Hole Symposium from Jay Powell. That's what I would be saying right there, Euro USD. All right, we had a couple of requests. We had a request for the S&P 500. I will get to that one in just a second, Tina. We had another request earlier in the live stream, though, for the Swissy. So let's go ahead and just pull the Swissy up right here. There's great levels, there's good levels, there's average levels, there's all kinds of levels. And I love 38% levels. This is one of those that it was really difficult to not, I believe it's a weekly, very difficult to not just be taking these trades aggressively from that top side resistance zone. This really is a nice big wave. You can see we had just an epic sell-off here in the Swissy earlier this year. Then we had the tariff panic of early April when that's really when the Swiss franc was, people are snatching up francs really quick. And then there's your rally right there, that spike high. And then we came down, and this wave right here is a pretty good one. That high right there is about 84.76. This extreme low from the 30th of June, the week of the 30th of June, has really held up nicely as downside support in a lot of ways, 78.72. So you've got about 600 pips there, something like that. So nice rally here. This got a little bit choppy right there on the 28th of July, but since then, that 38% level that we've had outlined for seemingly ever, right around 81 flat, that's pretty darn good top side resistance. So right now we're printing 80.37. You've also got a 13-period EMA up there, or 13-week EMA, which is about at 80.90. That's a big level. So you've got 80.90 and 81. Keep a close eye on that zone. That's robust topside resistance. Do I want to buy this thing or sell it? I want to sell it. I want to sell it really every chance we get, but I don't really see that developing here until we get a little bit of a run at that 81 level. And as soon as we get that, then we probably could step in and sell it. It's about 62 pips away. I would be patient with this one. I wouldn't just pile into it because you're worried about missing a trade, but not bad stuff right here. I love the market structure. I think we've got an opportunity there potentially to win. And the other thing is I love converging indicators. Love them. Absolutely love them. So the 80-90 level right around our 13-period EMA and the 38% level, that's pretty good stuff. All right, let's go ahead and take a look at the I did want to go through an orb trade. Let's back off and check out my orb template, which basically is just a naked chart. Let's go ahead and open this thing up anyways. So what do we have here? Remember the 15-minute orb? A lot of you really love this strategy. It's growing on me. It's really coming around. S&P 500, if we were going to look at the US 500, how would we trade it with the orb? It's imperative that if you're going to trade a U.S. equities index using like a 15-minute or a 30-minute, you know exactly when the market opens in the United States, 9:30 a.m. Eastern. It is critical. It is critical that you get that timing right because that is the basis of our orb trade. Why? Well, very simple. That's when the volume gets back in the market. So if you had a volume indicator, this one I believe is denominated in ticks. A lot of the CFDs and even the Forex pairs are denominated in ticks, but we'll show you a futures contract in a second. This first 15-minute bar would be your initial. That would be right after you open. That would be your initial entry, or excuse me, the initial part of your range. And then your second bar would be right there. 2-bar orb. That's about as easy as building an opening range. An opening range is just a basic 2-bar orb. So just to sort of highlight this for you, what is it going to look like? It's going to look like that. So what's happened with this orb? Well, a couple of things have happened. Number one, you sort of got a head fake right there. You probably could have bought in right there and lost. That would have been a challenge. If you didn't take that trade right there, then you potentially could have waited and sold this one down here, and you're getting chopped up to death right there as well. So what you want to do with a strategy like this in a situation like this, even though the US 500 is off, a 1.25%, it really has turned into absolute rotation during the U.S. market, and a lot of that has to do with the Trump announcement that's coming out in about 30 minutes. Nobody really knows what it is, and nobody's seen Trump in like a week, which is strange. But if you were trading this during the overnight, I believe Tina was trading this during the overnight, you could see 1 a.m., that right there. You can see this volume spike, this area right in here. That's the London Open. So if you're looking at potentially trading the London Open, it's not too bad. The volume is there, and you can see you just sort of started tripping off in a big way. Price consolidated, volume dries up, price consolidates, and then it breaks. So if you got a short from up there, really on the London Open, you have fantastic work. Fantastic work. Was there any way that we could have maybe used this 920 potentially to sell that US 500? And the answer is yes. Right there. There it is. Yesterday about 5 p.m., that would have been shortly after 5 p.m., 7 p.m. Eastern. That would have been shortly after the futures markets opened. We talked about that yesterday, but it's always hard. It's always difficult when you've got a holiday because the futures markets, they don't just stay closed until the next day's opening bell. Typically, they have an electronic open, and you get in there, and that's when the price, the price starts changing and things start ticking by. But right there was your 920 EMA crossover on the 30-minute chart. Interesting. There was your break, and there was your sell-off, and it really did work as a predictor. The problem, though, is trading crossovers when there really is no volume is you get chopped up. So like right here would have been a bid, and then there was a sell, and then there was a bid, and then there was a sell, and you had to really just sort of just keep taking losses and getting chopped up until you got that big break you were looking for from your signal. Tough stuff. I mean, that's difficult trading when there's no volume in there. Very difficult when the market's that thin. Now the market is not thin. There's a lot of folks in there, and they're all doing business. Let's go ahead and step back time frames here on the U.S. On the U.S. 500. This is the Euro Australian dollar. We're going to talk about that in a second, but I want to look at the U.S. 500 here. So we talked about outlining. I believe the question earlier was how do you when you're in an all-time high situation, how do you identify topside targets? How do you identify resistance zones? And it's prima facie evidence, and it's everywhere, that the big round numbers are dictating policy in anything that's trending to all-time highs. $3,500 was huge in gold. We talked about that. $40 was huge for silver. Natural resistance here is $6,500. There's no question about it. It's not even debatable. It's not even debatable right there. What was your high for August? Your high for August was 65.07. Since then, you've sort of come off and fallen a little bit, about 1% to open September's trade. So do we want to be bullish or bearish? Well, we know that rate cuts are coming. So if you sold 65 on a short-term trade, that's fantastic. I mean, you made some money there. That's great. I mean, you hit your 2 risk first reward, or your 1 to 3, 1 to 4, whatever. That's good trade right in front of that big round number. Now, how do we approach the rest of this action? How do we approach it? We have to be patient. Now, if you wanted to sell right now, I really wouldn't mind it, just because you do have a stop-out point. You stop yourself out up above 65. I don't hate that trade. I really don't. I just think it's high risk, because you are going against what is a macro uptrend, really, that goes back, I mean, to full disclosure, I mean, it really does go back to the COVID-19 era. March of 2020, the big sell-off. Remember, everybody thought the world was ending for U.S. stocks, and since then, it's just been a rocket ship north. A lot of that has to do with cheap money, a lot of rate cuts during that period, and then a few rate hikes. But it doesn't matter, because the market just keeps churning higher and higher and higher, because there is enough liquidity in there to drive things where they need to be. Well, there you go, 6,500 setting up as a short-term area. You'll notice we had the same phenomenon there at 6,000. So for me, if we do get a pullback, you can see this was sort of the craziness of April. That was the tariff, really the tariff panic, something like that. Spike low, spike high. You'd be looking at maybe grabbing a pullback down there at 58, 59. I don't see a scenario where we get that big of a sell-off. That type of trade right there is probably one that we'll be looking at later in the fall. Probably won't get that one in September. It would be a really epic sell-off. It would take a macro market driver to take us to that level. So, you know, our monthly level is probably not going to be much help, at least not right now, maybe eventually. Here's your weekly. You can see your weekly chart. One of these things, you could definitely be looking maybe to buy that moving average, which is down there around 62.58, something like that. It's a lot better. Gives you an opportunity potentially to get long with a little bit of meaning. But you'll notice how tight the last several weeks have been. But we're moving now. We're moving. And that's a good thing. That's what we've been waiting for seemingly ever. Pullback right there at 62% is probably a pretty strong level. 78 right there is going to be 69.1. And you've also got that 13-period EMA down there at 62.58. That probably would be the zone that pretty robust support. 78% with the indicator, with the 13 EMA. That's probably a pretty good one. So I'd be watching that relatively closely. Definitely, for sure. Let me see. Let's see. Tina, I like the short video that you made through the Switch Markets newsletter. Absolutely. I enjoy those. Those are a lot of fun. We just try to keep them short. You guys, if you're watching the live streams and things, we cover most of these markets pretty much every day. Let me see, Brian. I'm a gold trader, but I keep losing on the Asian sessions. Well, I always say this. If you keep losing doing something, maybe adjust your approach. Maybe take your approach back to the London session. If you were successful making money there, that probably is the right answer. Let me see. Tina, yes, I looked at the bigger picture. It is very bullish with the S&P. It is, but that doesn't mean that, you know, if you made money to the short side to open this week, that's great. That's fantastic. Just be aware that there is some big-time support levels down here, and these support zones more than likely are going to be effective, at least when we're talking about intraday or short-term trading. Now, is the top in for the S&P 500? They're going to cut interest rates. And next year, if Trump's around and they're running the FOMC the way it looks like it, there's going to be more rate cuts. So I don't really know what to say about it. All right, here we go. This is sort of the big story that's developing, and we're looking at the statement coming across the board in about, 22 minutes. Thing about Trump and his statements is he's typically never really on time. A lot of these, he'll roll in an hour late, or somebody from the administration will reschedule at the last minute. We've seen that over and over and over and over again. So that's one of those things you have to be aware of. So if you're trading today, great. Definitely keep one eye on the news cycle. But if you're not, if you're on the sidelines, I don't know that you sit around waiting all day for the Trump speech, just because we don't know what exactly he's going to say. Well, here you go. The top stories are interesting. Trump resignation chances surge. We're going to look at those in just a second. Trump to make surprise announcements amid health rumors. Internet's asking question. Resignation, tariffs, and wild theories. Trump's big speech tonight has the world guessing. Is Donald Trump resigning? So this really was the scuttlebutt. This was it. This is what everybody was talking about today is what's Trump going to say? What's Trump going to say? So look at this headline right here. Trump resignation chances surge before the White House announcement. Polymarket. Well, then you go over to Polymarket and you go, well, what's the chance? And that's less than 1%. So I don't think Trump's going to step down today. I don't step down. So, but how about the rest of the year? Will Trump resign in 2025? 5% chance. Trump out as president, a 10% chance. Those are very, very low. It would take something very serious for Trump to leave office. And it won't be any sort of accusations. It won't be legal action. It won't be impeachment threats. He's not going to leave over any of that. What Trump could end up doing, though, is having health problems. A lot of people have been talking about that because of really his appearance. He definitely has looked a little bit tired in at times, a little bit older than he did just a few months ago. There's also a lot of swelling in the ankles. And if you guys know anything about the swollen ankles and the hearts and circulation, you know that when your ankles swell really big, it means you're having some potential heart issues. That's been a huge rumor, but I don't know that any of that's true. But it is shaking the markets today. I truly believe that, and that's one of the reasons why that S&P 500 really flattened out in that orb trade, didn't go much of anywhere. So I think that this is interesting. It's always interesting, to say the least, to listen to what Trump has to say, because it typically is a big surprise. You'll also notice Polymarket has a 25 basis point rate cut for September. We think that that's pretty much a foregone conclusion, so we'll wait and see. As far as the rest of our headlines, not much out there. There was some legal challenges, National Guard and military, California, things like that. There's a lot of political and civil unrest right now in the United States, sort of to be expected towards the tail end of the summer. We usually see Labor Day weekend being sort of full of protests and all sorts of things. So yeah, we're just going to sort of wait, sort of, I wouldn't say with bated breath, but we're going to wait and see exactly what the announcement is today. Euro Australian dollar, this was an interesting one for us. Daily chart, you'll notice that this is the 920 EMA crossover. The 9 crossed under the 20, and right there is sort of that doji formation. That inverted hammer suggests that potentially a sell signal is on the immediate horizon here. So we do have a sell on that daily 920 for the Euro Australian dollar. I'm watching it closely. I don't really know if that you go short right now, but that's what the that's pretty much what the technicals say to do with this Euro Aussie. So I'm watching this one closely. It's a pretty good mover. A lot of folks have been interested in this pair, very, I wouldn't say religiously, but this is a heavily traded pair right now. A lot of it has to do with the volatility that we're seeing in the euro. As far as what the dollar yen, let's go ahead and take a look at the dollar yen. Sort of your breakout buy, there it is. There's your breakout buy. You're going to have a buy signal towards the end of today's session. The real question is do we believe that the dollar yen is actually going to do something? A lot of this came on the resignation news. We're going to talk more about that later this week once we have a chance to unpack it. There's so much hitting the news wires right now. But the yen, for a long time now, has been relatively strong against the U.S. dollar. It's been gaining ground. Well, the problem is, the big challenge that you have, you can see on the weekly chart, it's been a pretty good run for the Japanese yen going back to probably January, the beginning of the year. It's been solid. So now we're sort of bouncing. You can see we got a great bounce off of that monthly 38%. I'm not going to worry about that level too much. That's long gone. But you do have some compression right here on the weekly chart. So you got real tight scenario. You got a buy on the weekly, and now you got a buy setting up on the daily. What do you have on the 4-hour? You got a buy setting up on the 4-hour chart. So you probably want to be favoring the long side of the dollar yen right now, at least until we see what exactly the prognosis is out of Japan and what we think could potentially happen. I think it's a very interesting type of a scenario. But spike low there to a spike high there on the 4-hour chart. You can see really a beautiful pullback right down to your 9 EMA, and then we just sort of bounced north from there. Bullish bias here. I would say a slightly bullish bias. Do we think that the breakout's on the way? Maybe, maybe not. This market hasn't done anything for so long, but right up there, maybe 149-ish, something like that, 149. Next big round number, odds are that if you take out 149, we go up and have a look at 150. 150 is a great big round number, so you definitely want to be cognizant of that up there to the top side. Maybe as a potential top side target after this 4-hour buy or the daily buy that's setting up today, very possible. But the signals are setting up here all across the Forex. It shouldn't surprise anybody because we are back. Well, we're back in the office and back ready to go, just to go ham here for the next 12 weeks or so. And all the liquidity providers are back as well. So this is the time to be trading. It's always great. Trading right after Labor Day is great. Typically, we'll have a lot of fun here over the next month or so. And then things will sort of – October's always pretty good. It's a long trading month. So, you start trading October, you're in great shape. But then when you look at potentially November November's tricky because the first 2 weeks are good, and then right around that Thanksgiving holiday, you start to see liquidity providers start to leave, some of them for the rest of the year. So we got to strike while the iron's hot, and that is right now. All right, everybody, I think I'm going to sign off. I've gone on long enough today. If you have any questions at all, head on over to Switch, or excuse me, if you want to have a broker, go to Switch Markets and check out some of the value-added things that are there. There's access to tools like Track a Trader. There's access to the Algo Builder. There's a lot there at Switch Markets, so check it out. If you're looking for a broker, if you just want to send me a private message, head on over to howtotrade.com. Give me a follow. Just click on my picture at the top of the screen. You'll get analysis going right to your inbox every day, your email inbox every day, and then you'll also be able to send me private messages. Right now, I'm running behind on the private messages. I've been in meetings all day, so you'll just have to bear with me. I will answer those by the end of today, though, and then we'll have a trade idea out probably for the Asia Pacific session, which will be a little bit later today. A few things we've got to look at towards today's close, and the big market driver right now is the world's wondering what Trump's going to say. We're all wondering it. We just got to wait and see. All right, everybody. Blue Mango, thanks for the stream. Absolutely. My pleasure. You guys have a fantastic trading day. Yeah, we're back tomorrow with our Switch Markets live webinar series. So either check us out in the How to Trade trading room or over on the Switch Markets YouTube channel. We are going to be talking Fibonacci trading strategies. And, of course, if there's any big, giant news that comes out of the Trump engagement today, we'll be all over it. We'll be sure to cover that as well. All right, everybody. Patrick DeChamps, you're absolutely welcome, guys. All right. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.